there are two paths the market can take right now, and they have massive implications for your money. Find out which one I think we're headed down. What's going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Just finished up a swim, and man, the goggles like smashed into my eyes. It looks like I got raccoon eyes, and like my eyes are sunken in more than they already are because I barely sleep. But anyway, happy Friday to all of you. The markets are closed today, so it's always unique for me whenever there is no trading taking place. Now, futures are open. I don't trade futures. I like taking a little break. Crypto markets are open, but everybody gets a little reprieve from the chaos that has been the stock market. And like I said at the beginning of the video, the market is headed for one of two paths. And I'm going to explain what those paths are to you here today, because we have a 3-day weekend before the market opens back up on Monday. And I'm going to tell you what those two paths are and which one I think we are most likely to go down. So let's start with the doom and gloom path, the bear market, the crash, the 1929, 2008, or 1970s because of the Yom Kippur War during that time period. And so looking at the factors that would lead to something like that would mean we have a structural bear market. So that means that this war between the United States and Iran persists, that the Strait of Hormuz remains tightened up, closed, shut down. It's difficult to pass through. It restricts that 20% of the global oil supply. And that hikes up energy prices, hikes up oil, drives up inflation, and as a result of inflation being elevated, then that increases interest rates, which puts pressure on the consumer, and that triggers a recession. And on top of that, you have some cracks and weakness in the private credit market. So potentially that starts to tumble, that falls. And we're looking at something similar to potentially a 2008, right? Where you had a 5-year period from 08 to 2013 before the markets return to their pre-crash levels. So that's the first path. And your doomers out there who are constantly calling for bear markets, for crashes, are beating the drum saying, this time it's different. It's going to happen. It's going to be worse than 2008. It's going to be worse than 1929. So that's the first path, all right? Legitimate reasons, legitimate possibility that could happen. The second path is the normal market correction. Normal market correction. Remember, normal market corrections are anywhere from 10 to 20%. It's when you dip below 20% that things get sketchy. Now, if we look at the major indices, Dow Jones, IWM, QQQ, NASDAQ, have all corrected 10%. The SPY, the SPX, whichever you look at, is close to 10%. It's basically there, but it's not there. It's 0.2 points away. So it's very, very close. And if you look at how far we ran after last year's weakness off of the tariffs, off of Liberation Day, the 21.4% decrease, we still have not had a 10% drop on the SPX. We haven't had a 10% drop on the Qs, IWM, or the Dow Jones. We got those. We didn't get the 10% on the SPX. So potentially what just happened, if that flush, if that weakness, if that drop was the correction, and the market is satisfied with that, investors are satisfied with that, they feel that valuations are reset, now we could start the next leg up. right? But here's the thing. The markets can correct a little bit more. And because the war with Iran is not yet finished, that there's still uncertainty out there. Trump said in his speech the other night that there are still 2 to 3 more weeks. There was no definitive timeline given, a date that says at X date we're done. So that means that this weakness can persist for some time. And so if we have escalation of rhetoric between the countries, intensification of threats, if you have other countries getting involved, if you have oil prices going higher, then that means we could have a deeper sell-off, right? And we could get that 10% on the SPX. So those are the two paths: full-on bear market, correction. What is most likely from my perspective? Here's what I'll tell you. When you look at everything in totality, we are probably at the midpoint with this war campaign between the United States and Iran, meaning that most of the fear has been priced in to the market, but not 100%, meaning there's still some opportunity for a downside move, maybe even to 14% total on all the indices, the SPX. And let's say that there are ground troops, there's ground assaults. That would be that capitulatory event, which would send it down, drop it. But I think at that point, the market could price in worst case. And then from there, I think you would see buyers step back in, and that would be it. So I think that is the more likely component, because we are still in a strong bull cycle. We are still in the early stages of artificial intelligence in terms of its impact on productivity, its impact on the consumer, its impact on profits, its impact on earnings. And we haven't fully seen that yet. Now, there is disruption that is coming out of that. There's no question, but we can't overlook and just dismiss the abundance that it's also going to provide. So we have to look at that. You also have to look at the earnings expectations for companies that have been increased. And so that has to be factored in as well. But there's also the political component that you have to take into consideration here. Midterm elections are coming up this fall. It is no secret that Trump loves a raging stock market. To him, that's an indicator of the success of his performance as president. A higher stock market heading into midterm elections is good for Trump. It's good for the Republican Party. And they want to maintain their status as a party. And a stock market in a bear market at midterm elections is not going to reflect favorably on the Republicans. So keep that in mind. And don't dismiss it and say, oh, no, politics is a very real game. I'm not being political saying this. I'm just telling you factual information. The second piece is heading into midterm elections. If there is a war that is still going on, that's still continuing, and American soldiers are dying, energy prices are going up, inflation is going higher, people are paying more at the pump for gas, and you have fomenting discontent within the population for the war, you have now two negative factors applying pressure on that party. So there is political livelihood at stake here. You have to consider that. You have to take that into consideration. And so looking at AI, where we are with that, looking at the earnings, looking at this bull cycle, but also looking at this political component in terms of midterm elections, that makes me look at this more of a correction, more so than a bear market. Does that mean that structurally underneath everything is all rosy and good? No, I don't think it is. In fact, I think there will be a time in the next 1 to 2.5 years that we do get a structural bear market, meaning more than 30% and for a longer duration, probably around 2028. It's going to come. But there are a lot of things that can be done in advance to keep this thing propped up and moving higher. And I think that's what we're going to see. So we can get that one more drop that would create a nice double bottom on the charts, on the daily chart for the broader indices. This gets resolved. Oil gets flowing again, moving, and the market resolves upwards. And just to go take a look at some of the charts. Yeah, the indices are hanging in there, but there's a lot of stocks that are just crushed and beat down, that are at solid values. Can they come lower? Absolutely. But I think we're going to see some momentum higher here within the next couple of weeks. Could be completely wrong, but that's how I'm looking at this situation. Follow the money, follow the power, follow the politics, follow these midterm elections. And that really, I think, will tell us what's going to happen. So, with that said, I hope you have an amazing holiday weekend. Love you guys so much. While you are on your way out, make sure you check out one of these videos here at the bottom. Thank you for your support of the channel. Most importantly, make it a great day. Honor the moment. And, ladies and gentlemen, be grateful. Take care, everyone.